We're live. Welcome,
There it
everyone.
is. There it is. I was waiting for it. You had me on the edge of my seat. What day is it, Justin?
It's Tuesday, and it's September 20th. Got
This is news you can use from
it.
YAA. We've got Justin Fisher. I am Zach Shefska. Pops is on the mend. Turns out he probably doesn't have COVID. He has diverticulitis. So if you ever want to do some
Oof.
research on inflammation or an infection of the lower intestine, I don't know. He's in a decent amount of pain. I brought him chicken soup, Jello, and some electrolyte waters yesterday, and yeah, he needs to rest.
Well, Zach, I don't know if your parents ever told you when you were little that, like, if you eat a watermelon seed, that you'll grow a watermelon in your stomach or something like that. Did you ever hear that? No, my parents told me that. It's kind of messed up, but yeah, that's basically what diverticulitis is. You get something lodged in your intestines, and it starts to cause irritation. Hopefully, Ray doesn't start to grow various vegetables in his stomach from seeds that got lodged, but wishing him the best.
Wishing you the best, Dad. Hope you feel better soon. He says he should be back in action tomorrow, so looking forward to that. Thank you, everyone, for your kind wishes. We really appreciate. Justin, I want to kick
Yes.
today off with the latest data from the CFPB. Banks are getting nervous, okay? And I think this is a pretty big story. We'll probably do a video over on the main YAA channel about this as well. And we are going to follow this up with the Black Book market update. And let's even do it today, Justin. Let's do the power sports and let's do all the ancillary products that they watch or categories of products they watch as well, because we're seeing prices for everything start to come down. But this is going to be a surprise to you. I did not share this with you yet. So live, we'll get your reaction to it. Sound good?
Sounds good.
All right, the CFPB put out an article just yesterday, Market Monitoring Insights, examining the potential credit impact of high vehicle costs for consumers. It's nice to know that the CFPB is really on their A game here.
Yeah.
So as you start to look through this report, their whole premise for doing this analysis is, well, if car prices have gone up significantly, maybe the debt burden that Americans have has gone up as well. But there are some super interesting insights here into loan delinquencies that we'll get to in a second. This chart, though, Justin, I know it's a little bit blurry, but they're showing the prices of new vehicles and used vehicles in terms of the percentage rise since July of 2020 to July of 2022. So obviously, used car prices have gone up over 40%. New car prices have gone up over 20%. We know this. This is unfortunately kind of table stakes information.
Yeah. Yeah. First reaction I have here is wow, I didn't realize that used vehicle prices had climbed so much higher than new vehicle prices, but I should be the one to make that connection, shouldn't I?
It's all good. It's all good. Then we have the average amount being financed broken down by the type of borrower. And so, obviously, if you have deeper pockets and a higher credit score, you're going to be borrowing more. But look how sharp. I want to focus in here on deep subprime. That's this bottom line here. How sharp the increase was for deep subprime borrowers. They have seen the biggest increase in amount of money that they are financing. Then, as you scroll down here, they have also seen the biggest relative increase in the average term for the loan they're taking on. So this chart is showing you for prime, near prime, subprime, and deep subprime, the average amount of months their loan term is. Justin, look at the trend for deep subprime. And the reason we're going to focus on deep subprime is because when we get to delinquencies, it's nerve-wracking, in all honesty. Again, the reason for the title of today, but look at that. I mean, it's like a pretty aggressive slope up and to the right. The average loan term length for a deep subprime auto borrower is 65 months.
Well, my first take on this is that too many people are shopping for a car payment rather than thinking about the long game. And wow, that's a lot of interest if you're talking deep subprime. I mean, sometimes 20% rates.
Exactly. And then the amount that you're financing, again, is significantly more because, as the
Yeah.
CFPB, very astutely pointed out, the price of the vehicle has gone up. Then we've got the average monthly payment. So no surprise here. The average monthly payment for all borrowers has increased significantly. Nothing too crazy there. Then we start to get into delinquency rates, Justin. And when we start to look at delinquency rates, let's pull back up here. Recent data shows that the rate of transition into delinquency, especially for low income borrowers, has risen over the past year. This rise could simply be a return to pre-pandemic levels resulting from the end of pandemic-related stimulus policies. However, inflationary pressures could mean the cost of car ownership are outpacing income growth for some consumers with auto loans. While we cannot fully infer the contribution of either of these possible explanations to the rise in delinquency rates, we cannot ignore the relationship between larger loan amounts and increasing interest rates to consumers' monthly budgets, and some consumers struggle to stay current on their loans. You can see that delinquency rates, and this is the 0 to 25th percentile, those are going to be your subprime borrowers, it's near 1.5%, and it's going back up to 1.5%. It was well below 1% during kind of like peak stimulus times. So we are seeing a significant, for subprime borrowers, significant increase in delinquency rates amongst our subprime borrowers.
Well, interestingly enough, it looks like based on this graph, it's just getting back to historical norms, at least since the Great Recession of 2008. After, like you said, everybody had that stimulus flex going on with that cash money rolling in from the from El Gobierno. But now that that's over, it's getting back to historical norms. To me, I'm going to be wondering just how long does this trend continue, because we've been seeing used car prices and new car prices remain elevated, and that's a whole nother topic to get into, but new car prices may never go down.
You, I know, are working on a research piece that'll be going out tomorrow on the Join YAA blog. If you're not a newsletter subscriber, you totally should be. Just go to joinyaa.com/guides and subscribe. And I know you're working on a piece that's about the total monthly payment, like the total cost of owning a vehicle and how much that has actually increased, not just the car payment. But I want to show you something here, Justin, because I agree with you. We're just heading back to historical norms. Look, if you go back to 2019, 2018, the deep subprime borrowers, they were at a 1.5% delinquency rate. So 1.5 out of 100 loans would go delinquent for deep subprime borrowers. Got it. Makes sense. However, when you start to look at what are called vintages, so what are the cohorts from period of time? What are they doing over time? It's called looking at a vintage. You start to see some really interesting things. So this is showing broken down by quarters since the loan was originated. And I know there's a lot of lines on the screen, but I'm going to explain it. The green line, so they all start from 0% delinquent at the first quarter when they were originated. The green line shows you that loans from 2017 after 8 quarters ended up about 0.8% delinquent, a little bit less than 0.8%. Does that make sense?
Yeah.
2018's vintage after 8 quarters looked like it was over 0.8%. 2019's vintage was right under 2017's. 2020's was below 2019's. Look at 2021. We're not 8 quarters out yet from the 2021 loans that were originated, but the vintage is already performing at a higher rate, so more poorly in terms of delinquency. And look at this, Justin. It had been performing, I guess the word would be better in this case, it had been performing with a lower delinquency rate through the subsequent or the same number of quarters as prior vintages, but it has increased significantly. And then 2022 vintage is already outperforming in terms of more delinquencies than any other vintage. This gets broken down by credit tier, which I want to show you in a second. But what do you make of this? I know it's a little bit convoluted, but once you wrap your head around it, this is like very telling data.
Yeah, I mean, it's a snowballing effect, clearly, and I never thought I'd be talking about auto loan vintages with notes of debt and yes, I don't know how much you're into wine, Zach, but this is not
I
good
don't
news.
drink, but that's
It's
okay.
my first time taking a look at this data with you, so yeah, this is not good. And I just ran some numbers. Now, Zach, can you
Yeah.
scroll up real quick and take a look at the deep subprime average loan term? Was it 65 months?
Yeah. And then I do want to show you one other vintage related piece. But yes, it
Okay.
is at 65 months.
Okay. And then show me the vintage piece, and then I'm gonna share my screen if I can.
Perfect. Okay. So I want to show you this one other piece, which would be the vintages broken down by credit tier. Again,
Okay.
I know this is getting a little like deep into the nitty gritty, but this is incredible. If we look at just deep subprime over here on the left, green is deep subprime loans over 8 quarters, excuse me, how many go delinquent? And over 8 quarters for deep subprime, the green, you can't even see it here. It's between 5 and 6%. That was 2017. In 2018, it was the same exact thing. Between 5 and 6% went delinquent. In 2019, it was less than 5% went delinquent.
That's
In
scary.
2020, it was 6% that went delinquent. And look at 2021 through 6 quarters, it's already outperforming every other vintage. Between 5 and 6% are already delinquent. And the most appalling thing here, Justin, look at the slope of this gray line for 2022. It is the fastest rise we've seen in delinquencies amongst deep subprime borrowers. And thank you, CFPB. They actually broke it down for us here. This trend is even more pronounced for consumers with subprime and deep subprime credit scores. For example, 2022 vintage auto loans for consumers with deep subprime credit scores were 2.4% delinquent 2 quarters after origination, which is 33% higher than the previous 5-year high set in 2022.
Wow.
I know some people might not like the data. This is what I have dreams about this stuff. Thank you, CFPB, for putting this out. What else do you need to see to know that there is a bubble that I know my dad's not here to tell me it's not bursting, but like it's leaking. Something's happening. It's not good.
Yeah, we're gonna have to start paying more attention to the latest inflationary related data, and especially the data that will come out that reflects just how much, to what extent people's incomes are keeping up with the trends that we're seeing in the overall economy, because that's going to be reflected even more when it comes to repossession rates and everything that you just showed us. Are people going to be able to keep up with? Right now, there's an average $735 monthly car payment. Are people going to be able to keep up with that if their incomes are not keeping up with the inflationary pressures they're seeing in every aspect of their monthly budget? It's, not just about the car.
100%, 100%. All right, you've got
Show and
control, my
tell?
friend.
Show and tell?
Yeah, what would you like to
Okay.
share?
Yeah, one other piece of data I would like you to share with us one more time is, what was the average amount borrowed for deep subprime as of the CPB?
Bear with me, bear with me, bear with me. It looks like it's about $23,000.
Okay, so I've got a little show and tell here just to really hammer home what we'll be covering in this week's YAA newsletter. It's fascinating stuff. So let's see, share screen, get the right tab. Got a calculator to share with you guys.
Ooh,
Okay,
calculators.
now the way I tricked the system was by putting a 0 down payment and just making this the loan amount, okay? The average loan term for deep subprime was about 65 months. I looked it
Yep.
up. The average interest rate for a new car for deep subprime as of last month was 13% interest rate. That's a high rate.
Wow.
If that's what you're signing up for 65 months, borrowers today are getting into $9,000 of loan interest over 65 months. That blows my mind.
Wow. 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 Let's do something like a used car that might have more like a 16, 17, 18% interest rate. I'm curious how much we're paying then. Oh,
13 grand. 13 grand. And let's see if someone is going to try to get into that I don't know, Dodge Charger before they go extinct and they're willing to throw big money down. Just look at how interest compounds. That is something that people need to keep in mind before they sign up for one of these inflated new car prices and committing to an extended loan term. Yeah, we're going to be covering that this week in our newsletter. Not just this scenario, but scenarios that relate to every segment of car buyer. And wow, that's just some crazy stuff, isn't it?
it really is. And then obviously, it was awesome when we bought the website caredge.com. Part of the value of that is they have all the cost of ownership data as well. I mean, there's just so much more that goes into purchasing a vehicle than just the
Hmm.
purchase price. And I think the CFPB, again, it's like they're kind of asleep at the wheel. Like, yeah, as car prices are going up, people are financing more, but the prices for all things associated with cars are also going up. We're seeing this. We help folks buy insurance, and we're seeing insurance prices go up. We see this with maintenance and repairs, that those prices are going up. Obviously, there was a time earlier this year, fuel prices were through the roof. Fortunately, they've come down, but like the total, I think I mentioned it on yesterday's show. What was it? It was like 13%, 12.6% of new cars now have an average monthly payment of over $1,000. So I mean,
I
it's just
remember because I was close. It was 12.7%. I guess
yeah,
12.8.
yeah. Pretty wild stuff. All right, we are obviously going to be doing more reporting on car prices and CFPB data and all that. Again, Justin, thanks for mentioning. We've got the blog article coming out tomorrow, so please stay tuned for that. Let's switch gears. Let's talk a little bit here about used car prices, because we are seeing some really interesting trends thanks to the data from Black Book. I'll pull that up on the screen. First things first. This is a continuation, another week, another 0.9% decline. And let's just read this directly from Black Book. The wholesale market continued its decline last week, with the rate of decline remaining consistent with the past 7 weeks. 7 weeks of nearly a 1% decline in wholesale prices. Retail listing volume has been increasing, and retail listing prices are starting to soften. Typically, it takes 6 to 8 weeks for the retail market prices to reflect declines in wholesale pricing. That is the storyline. 7 straight weeks of nearly a percent decline in the wholesale market.
Yeah, the overall drop in the past week was about the same as we had seen for 7 weeks. However, when you start to look at the market segments, we've seen some changes in which vehicles are dropping quicker now.
Let's scroll on down. Great job teeing that up. Compact cars. Look at
Yeah.
that. A 1.17% decrease week over week. Decrease, I should say, week over week. That's beautiful. That's great to see. I'm going to say most likely a result of rental car companies probably not buying vehicles at the auction. That would be my guess.
Possibly, Zach. And something that came to mind in the last discussion we were having about basically car affordability just going out of control and affecting repossessions and all of that is that there have been more and more announcements lately from automakers canceling their most affordable cars, which are typically their lowest margin vehicles. So, I mean, it's great that we're seeing used compact car prices come down, because there are far fewer new compact or just in general affordable models out there now. So we need that's a segment where the used car market is even more important than ever before.
Honestly, it's like a disservice what these automakers are doing considering market conditions. And I know, if you're unfamiliar with Justin, he runs the YAA Electric YouTube channel. Justin is a proud EV owner, and we have got great resources on electric vehicles. Everyone's going all in on EVs, and the EV prices are insane too. So it's like there's no affordable vehicles. EV prices, everyone's all in, but the prices are unattainable. But we'll save that for a little bit. Yeah, go ahead.
Shout out to EVs. The average transaction price for an EV is 37% higher. 37% higher than the average transaction price for the overall market. That is insane. I don't want to feel like a rich person. Like I'm not, but here I am driving an EV, and people who look at these types of numbers are going to be like, "Wow, look at that guy in his Ioniq 5. It's a Hyundai, you guys."
It's Hyundai, you guys. Let's look at the truck and SUV segment. Full-size crossovers down 1.59%. Small pickup trucks down 1.45%. Continued pressure on luxury crossovers down 1.38%. I want to scroll down the page there, Justin, because there are a couple things here that are really, really interesting. For example, retail prices. Wholesale prices there. Used retail inventory. Here we go. Green line is this year. We have seen now a 10% increase in the number of vehicles online for sale as used cars than at the beginning of this year. If you don't think that's going to put some downward pressure on used car prices, you're wrong. It's going to take a little bit of time here, but a 10% increase is non-trivial. I mean, look at this chart. That's like one of the highest marks we've ever seen since 2019.
Yeah, if I've learned anything about car buying and car selling from Ray, it's that when you've got more inventory sitting on the lot, salespeople are more willing to negotiate. So even though Black Book did not share any specific retail used price data with us this week, I think this right here says enough, doesn't it?
Absolutely. Keep scrolling down here. What I want to look at is sales rates. Let's read the wholesale report. Even though floors remain high, buyers keep showing up. Sales rates across the board have been fairly dismal. Although we have been in a holding pattern over the last few weeks, there seems to be some positive momentum on the horizon. After dominating the lanes for months, rental companies have been relatively quiet in the lanes lately. So that would explain why compact car prices have dropped. as some manufacturers are beginning to allocate inventory to fleets again. This may also be why franchise dealers have been noticeably absent in lane as new inventory becomes more consistent for some dealers. As we head towards the fourth quarter during a normal year, we would expect model year changeovers and rapid fire launches. While that has not been the case over the last 2 years, this year could be different. Manufacturers have moved forward with refreshes and redesigns for model year 2023 and 2024 vehicles, and we look forward to seeing those at dealerships soon. Independent dealers have stayed consistent in the lane, always on the hunt for low mileage condition, quote, unicorns. There were more if sales last week, which could indicate that sellers are more willing to negotiate. Wholesale values have had significant decreases, much higher than would be expected for this time of year. The sales rate at the auction was still low at 58%. This cannot sustain itself forever. Ultimately, what that means is either the price at the auction is going to go lower and it's going to sell at the auction, or that dealer will be discounting that to a retail customer. Something has to happen here. As you said, you learned it from Ray. I think we all learned it from our parents. We learned it from economics class. Supply and demand. Supply on the used car side is starting to build back up, and you heard it there from Black Book. On the new car side, we're seeing a little bit of good news. A little bit, not a lot, but a little bit, enough to help used car prices come down.
Yeah, but then there's Ford. I don't know if you're ready to get into that, Zach.
Let's jump into Ford.
Yeah, I got a shout out to Ford's stock right now. They're down 10% on the day.
You just shouted out a stock. I love that.
Yeah, I
Not
mean,
financial advice. Not
no,
financial
I'm not
advice.
here to give financial advice, but thankful for having a diversified portfolio in my Roth IRA because I would not want to be all in on Ford right now. They are down 10%, but we're not here to talk about stocks. Why are investors freaking out? It's because Ford has said that supply chain issues are going to cost them an extra $1 billion in Q3. On top of that, there are between 40 and 45,000 trucks and SUVs that are likely to remain unfinished. They're partly built, but because of the lack of semiconductor chips and other parts, mostly chips though. Yeah, that's rough, Zach. Wow. GM said basically the same thing back in early July, but now we're hearing it much worse from Ford.
It has been interesting, Justin. I mean, when we covered last quarter's earnings and even just like this entire year, the automakers have been doing relatively well. Like they've made a ton of money, and the dealers obviously have been like, especially the public dealers that report quarterly, they've all been making a killing. You've kind of got to wonder, like we hear all this bad news, all these challenges with supply chains and whatnot. Where's that impacting their bottom lines? And I think we're starting to see the cracks. Toyota is an example of the cracks. I mean, they've made it very clear they're not going to make nearly as much money as they'd expected. They're not going to lose money for the fiscal year or for their most recent quarter, but they're not making as much as they expected. They've been public about that. Ford's coming out and saying it. GM's coming out and saying it. So I think we are seeing the reality of challenging supply chains and why automakers, dealers, us, no one wants it to be as short supplied as it is right now. Will it ever go back to what it was? Absolutely not. But no
Mhm.
one is satisfied by what's happening right now. An extra $1 billion in spend, even for a corporation like Ford, that's non-trivial.
Yeah, and you mentioned how automakers are having record profits, or at least they had pretty recently. Now, one way that they get to that point is by succeeding with their higher margin models. That seems to be why the markets are freaking out about Ford today, is because Ford came out and said they were brave, they had courage. They came out and said that, yeah, those 45,000 vehicles, they're our highest margin models. So that's why they expect it to have a significant chance of impacting their bottom line at the end of the third quarter, more so than if it was a bunch of EVs with lower margins or something like that.
Yeah, and it's just another example of we're never going to see on the new car side a return to the Honda Fits of the world actually coming out because you just make more money pumping out F-150s. You
Yeah.
100% do. And it is fascinating to look at, like we've got this coming from Steven, but go ahead and order your new Maverick. Anyway, that's like the whole push. I've been thinking about it. We should probably do a video for like what to expect buying a car in 2023, and it's like it's going to be more of the same on the new car side. You're going to place orders. You're 100% going to place orders. Everyone's definitely moving in that direction, and you're going to be placing orders for more expensive vehicles. That's the new reality.
Yeah, it's crazy. I wonder how you could compare the rate of inflation over the past 5 years to the rate of car prices increasing. I wonder what that comparison would look like. Gonna have to do that and share it with the viewers.
Yeah, it could be something for tomorrow's newsletter. I think that could go over really well. Do you mind if we actually one more thing on the used car side? Can we actually take a peek at the Black Book data for what they call the specialty market? Because I think it's interesting. I see a lot of comments, and I think there are a lot of parallels between what we're seeing in automotive and what we see in real estate. But there are things that are even closer than real estate, like a cousin or a close family member. Black Book also puts out monthly reports on what they call the specialty market, and I thought we could take a second to peek at this, Justin, because we are also seeing prices on the specialty market go down significantly. I'll read out the quote here from Scott Yarborough, and then we'll look at the chart. Power sports values are declining across the board, with one exception as we head into the fall. This year has seen the gradual return of traditional seasonal valuation patterns, though prices are still significantly elevated versus historical levels. This month is no different, as most major segments are down 1 to 2%. The only exception is the domestic cruiser segment, up a half point, and street bikes, which saw a negligible decline. But if we look at everything here, and this kind of speaks to the lack of consumer demand and the increase in expense to actually finance something. ATV prices down 1.3% month over month. Cruisers, metric cruiser, jet boats, off-road, on and off-road vehicles, scooters, snowmobiles, utility vehicles, watercrafts, everything's down, which I think, again, is a perfect indication, quite frankly, of what the Fed had intended by raising interest rates. And it obviously is having ramifications not just on used vehicles. It's also taking the specialty market down as well.
Yeah, maybe I'll be able to find an electric scooter for under $1,000 pretty soon.
I kind of doubt it. I still kind of doubt it. I don't think there's much of a chance on that front. So you kind of have a dichotomy of events happening. You've got new car prices that continue to rise and potentially some light at the end of the tunnel. Like, hey, we're getting more inventory, while you're seeing used car prices and used car inventory and used vehicle inventory overall start to increase. I think we're at the tipping point here where if you're a consumer and you need to buy something, I mean, I would go find that deal on a used car, even at its high price relative to what it would have been worth 2 or 3 years ago. I think that's starting to become a better option than placing an order and hoping you can get something at MSRP, but MSRP goes up. Ford's going to pass that cost along to the consumer. You've got to think.
Yeah, but if you're going out and shopping for a used car right now, don't just settle for the sticker price. You should be able to negotiate at least 10% off, or maybe at least 5%, between 5 and 10% off. Would you agree?
100%. Do you want to do a quick test?
Sure.
Can you name a vehicle?
Hyundai Elantra. Why? I don't know.
I don't know why either, but we're going to do it. I don't even know what zip code I have this thing set to. It looks like I'm in Austin, Texas. Let's do it, Justin. Let's see. We're going to do something that's been on the market more than 60 days. Let's find one here. 86 days. That could work. Let's just do it. Let's click on 86 days. The first one here. This is in Austin, Texas. Its advertised price is $21,498. Interesting. Originally listed for sale at $21,988. I've always wondered, because we scrape the dealer website every single day. Do you think they lowered the price like this at that period of time just to try and bait people in to come in? Like, hey, look, price drop, come in, and then who knows what the price actually is at the end? I'm gonna pull up one other while you're answering that question. What do you think?
Maybe they just roll the dice and see what it should be that day. I don't know.
Maybe. All right, this one's been on dealer lot for 88 days. Let's take a quick peek. Okay, I think this one's a little more logical. So we have the current advertised price is $17,650.
I agree with
back
Mark
in June
here in the chat.
Yeah. What was that?
Mark says we should go to the great state of Florida to do a proper comparison.
All right. Let's look at Florida.
But this example is a good one. I'm sorry. It's just that caught my eye. Thank you, Mark.
It's all good. It's all good. But I mean, this is truly what's happening in the used car market. I mean, this is like a perfect example, honestly. And we're not cherry picking, obviously. I asked for a random. I feel like
you only picked two of them. That's not cherry picking. You picked two random ones.
And this has gone down from June to now. So what would that be? 4 months. $21,795 to $17,650. I mean, a $4,000 price decrease on a $20,000 vehicle. That's what? That's 20%.
Yeah, that's a pretty big decrease.
let's go to Florida really quickly and do one more before we call it a show. Do you know the zip code in Florida?
Nope.
Chat, someone, anyone, but not Tallahassee, please.
01247.
Really?
I just looked up Florida zip codes, and that's the first one I see. If
That
you want
is
Fort
Troy, New
Lauderdale,
York.
I've got one in Fort Lauderdale. Okay, yeah, that must have been wrong. 33311.
33311. Yeah, Fort Lauderdale sounds good. So we're looking at Elantras down in Florida. 82 days on the market for a 2017 Elantra with 43,000 miles. This is in Margate, Florida. Let's see what's happening in the great state of Florida. So as a new vehicle, way back when, this was a $22,618 vehicle. Here we go. This August price, $19,993. Currently advertised, there you go. You can see it right there, $17,500. So we're starting to see prices come down. Eeny, teeny bits. Another example of everything we talked about today. I think everyone sees what's going on in the market, and they're actually making some changes. Wow, lots of Florida zip codes.
But let's not forget the power of negotiation is what I want to emphasize, because even though the sticker price may not be dropping like a rock, you should be able to have far more negotiation power today than you could have just 3 or 4 months ago. So do not just settle for the sticker price. You could save thousands of dollars if you use the skills that YAA can empower you with.
Which is a good reminder, Justin. We've got 2 promotions running until the end of the month. If you join YAA as a member, use the code FALL20, save 20%. And, or I should say, or if you're going to purchase a vehicle service contract, an extended warranty, typically we make $500, but if you use the code FALL100 between now and the end of the month, we will make $400 because we will be giving you $100 off. So if you're buying a car and you need some help, we've got you with the Fall 20 promo. If you want to protect your vehicle, use the code FALL100. And I got to mention, Justin, I know I say it week in and week out, the finance and refinance. I got a meeting tomorrow, me and Miss Kimberly Klein. It's like the 5th meeting with one of these credit unions. They move a little slowly, but we are so close to having financing from YAA. If you need financing, please fill out this form. We will get back to you as quickly as possible once we are in your area with direct from credit unions at buy rate interest rates and refinancing.
That's crazy.
So like, as I look at this, the data from the beginning of today's show, I can't wait till we're ready to like pair people with credit unions. I mean, it's not even just auto. Like if you have a personal loan, refinance through a credit union, save a ton of money. And how do we make money from that? We're not sure yet, but we're not marking it up. We're not charging fees. I think we're going to build it into our membership at some point. But there's no fees. Like we really, truthfully, just want to save people money because it's kind of crazy when you start to look at the information. Like a lot of people are swimming in a lot of debt right now and paying a ton of interest, like you showcased.
Yeah, look at us grow, Zach. That's just some good news all around.
It is pretty cool, Justin. Even from when you joined the team beginning of this year, I think a lot of things have evolved. I'm really proud of what we're doing here.
Yeah, well, pat on the back to everyone involved, including the viewers and members out there. Thank you for joining us for this journey.
For sure. All right, let's call it a show for today, Justin. Thank you for being here with me. Yeah, tomorrow, 11 a.m. Eastern, you're going to be doing the YAA Electric Show with Justice. So tune in for that YAA Electric. Fingers crossed, knock on wood. I think my dad's going to be back in action tomorrow, so stay tuned to see Pops again. Hopefully he is feeling up for it. But if he's not, maybe I'll ask you to do a double, but we'll see.
Yeah, we'll see. Maybe you'll have to deal with me again. I'm going to leave everyone with something to ponder, okay? And that includes you, Zach. So breaking news out this morning, General Motors just got an order for 175,000 electric vehicles. Who placed the order? Hertz. Okay, we've heard this before.
What is Hertz doing?
Well, here's what you got to ponder. Everyone's got to ponder this. So 175,000 EVs ordered by Hertz, GM EVs. In Q2 of 2022, General Motors only produced 7,000 EVs in the whole quarter. That's what you got to ponder. I might be back tomorrow. Regardless, you guys have a beautiful day.
In the future, man, you got to give me a heads up because then I would have.
Really? You gotta be kidding me.
I mean, I can't believe you just dropped that stat. That was truly incredible. Also, I see lots of people here in the chat saying, hey, can you look for vehicles in Bend, Oregon, for example? Michael, I cannot. Well, actually, I can, but you should do it. Just go to joinyaa.com, start searching there, use the days on lot filter, check the price history, and share it with a friend. Justin, enjoy the day. I look forward to tomorrow's newsletter email. Everyone have a fantastic Tuesday. We'll be back at 9 a.m. Pacific, 12 p.m. Eastern tomorrow. Justin, catch you then. See you guys.
Yep. Have a great day, everyone.